Okay, welcome back to um what is this? What channel is this? I don't even know what channel this is anymore. But welcome back to Trade or Die. Um I've been trading on and off once again. And now I'm back. This time I'll be trading futures. On my screen, what you'll see is my P&L for the day and my simulation account. So for this account, I'm actually trying to do a prop firm challenge. I purchased the 150k challenge, and so the drawdown is $4,000. Profit target is 7,500. As you can see, I'm already about to fail this shit because I started at 150,000. It's gonna reset next month, but my main goal for this video is really to just solidify the strategy that I plan to deploy to pass the challenge, and then really just show myself these solid examples through chart history. Once I do that, I'm going to put all those examples like in an Excel sheet or document, and then I'm gonna really take a look at the days in which those trades actually work out, because the way that I want to trade, I'm trying to make it extremely simple, right? For me, this is what I want to see. This is exactly what I want to see. I want to see a breakout like I have here, right? We break structure low, price does a pullback in the same candle within the same body, and then price continues down. And my goal with these types of trades is to get at least I'm trading how much? $8 in order to get $16. So for example, something like this, what is this? So let's round it up. Let's get it to 51. No, put it to 50. Get to 50, damn it. Put it to 50. Okay, 50.25. And then $8. Let's make it $9. So 59.25 is really what I'm trying to aim for. And so let me zoom in a bit so it's easier. 9.25. Okay. So this is the type of risk reward I plan to aim for. And then the goal is to really, again, just get in on those pullbacks after a break, right? And really what I'm playing on is the momentum. So even if I were to take this on another trade, say over here, for example, or even just after the break and the close, again, like I still have that opportunity to get that that great risk reward. So I'm gonna start back as far as I can possibly go, and then we'll just continue. This is a form of back testing that I plan to do. But yeah, let's continue. So we're gonna go all the way to here. What date is this? I don't have dates here. Let's see if I could add date. Dates. Where are my dates? Let's show data box. Okay, so we'll keep the data box because it at least has a date. That's perfect. Date, and then local. Okay, perfect. So this is August 27th, and the time should be the exact same time. Let me just confirm. Right now is 8:40, so that's perfect. Time lines up. So we'll start at the end of August. Okay. So again, the goal is to really look at breaks and structure, and then taking that trade with at least a $9 stop loss. So that means we want at least double that in a take profit. Another thing I plan to do too is have auto break evens. So auto break even will be at the point at which I get to 1-to-1. So for example, I'm gonna put my risk reward here. Boom. We're gonna get $9. So let's go down to 5. Then 6.5 right there. Oops, 6.5 right there. So with this type of trade, for example, it would have probably went back down to break even because it would have never hit my my take profit, and that's completely okay. You know, shit happens. Shit happens because again, what we have structure here, right? It breaks it. We have the pullback, and it continues up. Again, it happened right here, but the thing with the bear candle here is that it wasn't within the prior candle's body, so it's not the most valid. This could have been an opportunity here to take sells. However, depending on which direction the market's going, I'd probably just leave it as is. Again, it's still built great structure down here, but again, we're just looking for those momentum plays. Over here's another great opportunity as well too. In my eyes, I see like, you know, a close above, a little bit above the prior highs. So in this case, you know, you take the trade, it's profitable, that's great. Another time over here, we have structure here, price breaks structure and gets that close above, and then we get the pullback. But then on this one, we get stopped out, which is unfortunate since, you know, it continued so high. There's another one right here too, another good opportunity. So let's say we were to take this one instead. Let me just make this smaller. Wait a second. Delete this. Like this one's smaller. So this is the one we got stopped out on. This one would have been profitable. And again, another time up here. Boom, right? There's a ton of opportunities like just in the market alone. Over here would have been a L, but that's okay. Usually for these types of momentum trades, you want to take the first and second break of structure because those will be the best. The reason over here why this one is invalid is because we're making higher highs, so we want to make sure that we're going to be in buys, right? That's the goal there. So buys would be the goal. Another opportunity up here as well, and again would have been profitable, which, you know, is great. So so price continues, we get into 10 o'clock, and then we're breaking structure, but we're not getting a decent pullback. We get a nice pullback here. However, the wick is too long to take that pullback. This long wick to me is indicating that, you know, price can still potentially be pushing up, and that's exactly what it did, right? So again, we'll wait for structure to break. Happens over here, and this one's a little tricky. This one has potential, right? We did break structure here. However, we still have this wick to get through. But let's just see what the risk would look like, right? If we were to do a $9 risk. So we get in after the close. We're at 29. So let's get to 39.5. minus 1, so 38.5. And this one would have been extremely close. This one would have been extremely close, depending on the price we got in at, right? So wait, let me bring it. So this one, yeah, this one would be extremely close, right? Because the wick comes up to here. But then again, before we even get to here, we'd actually hit take profit or potentially break even, depending on when the auto break even sets in. So now we get to 11:45. This opportunity isn't so good. The main reason is because there's 2 wicks, and you know, again, the indication over here is that, you know, the wick is longer than the body, so we're potentially going to be heading back up. This trade right here is, again, it's not the best trade because, you know, we're not breaking any structure to actually take the buys, right? And that's the tough thing about these types of trades. You really have to use your discretion in order to get the best possible buy, right? So now let's look at something like this, right? Where you see structure is broken, and then boom, you have that opportunity to take those buys even above and beyond, right? Because you're gonna have multiple targets. Excuse me. Okay, so let's continue. Over here is very tricky. You know, there's no structure formed other than the support, and then also the minor resistance up here, right? So it's either you wait for a setup to happen, like this, for example, with the risk of getting stopped out because we still have this support to go to, or you wait for it to bounce off the support and you take this trade. The risky thing about this trade though is that we haven't broken any type of support, so it'll almost be like you're chasing a trade, right? The alternative method would be to get it on the close. So for example, this same setup here where price closed above the minor resistance and continued happened over here as well too, right? Price closed above the minor here and just continued. But if you don't take this trade though, what you can do is get into this trade over here and potentially be stopped out. It really depends again on how close your stop is, right? Preferably you'd want to have your stop below the last low of the bear candle if you're getting into buys. But anyways, if we look at this trade right here, it does look like a perfect setup. However, we're in the buy mode, so we should wait. Now if we move on to the next trade, we have this trade is really tough to take. I know that I mentioned that this trade, the wick was way too big. However, the key thing here is that, again, we broke structure high, right? We do have structure up here, but that's the risk that you really have to take with it, right? The great thing about this setup is that the bear wick is not below the bull candle, which again could be great. And then this setup over here, 6 o'clock, this is just after the market reopens. I really avoid these times because you really don't want to be getting into the market. There's less liquidity and less movement as well, as you can see, right? So now let's get into August 28th. Let's go to 5 a.m. and then we'll just continue. All right, so now back into August 29th. So this would be a very difficult thing to trade. So coming into, 4 o'clock, wouldn't be awake. Boom, boom, boom. Price is creeping up. It comes up and then it does this thing. So another thing we really have to be mindful of as well are the sizes of the candles. So for example, this candle is so $2.99 all the way to $3.06. That's a $7 candle. When you compare that to candles like over here, 39 to 49, right? The size of the candle is literally $10. There's a lot more movement in the candle. I think that's a very, very important thing to consider, because again, right, the bigger the candle, the more people are in it, in my eyes. Even this one, so 220 from 208. So again, there has to be some kind of criteria for that, right? So I'm just going to try to set up the criteria right now on like what I would like to see for when I trade, right? So let me just get out my notes and make sure I get this correctly. Oops. So first thing, stop loss, $9 minimum. Take profit, $18 minimum to get that 2 to 1. Auto break even will be set to $9, or no, let's make it $10. So 10, that's 40 ticks. And then as far as the entry criteria, the body, so the body of the direction that we plan to trade, of that prior candle, it has to be at least an $8 candle. At least. If it's not an $8 candle, then there has to be some kind of consolidation in which the candles are small, so then we get a push in that direction. So an example of that would be something like over here, right? The range is very tiny, right? It's in that consolidation area. However, we get that push, right? There's always a push after. So let's just keep that in mind going forward, that we need $8 bodies minimum. So over here, we don't see any $8 bodies minimum. So like, look, 74 all the way to 83. Oh, wait a second. 74, wait. It's this one right here. 74. Oh, okay. So we can still consider these. Let's take a look at this one. 299 all the way to 306. This is very close as well too. We did break structure here, so this is definitely a potential trade that would have been a loss. Another thing again to really consider is the direction that we're trading. So let me grab one of these. Okay, so let's look at something like this. For example, we did break prior structure, but how big is our body? So 84 down to 71. This is a great body to trade off of. So let's see how we do. We go to 89.5, and this will probably get stopped out only because of how much it pulls back, and that's completely fine. We'll definitely have to consider, you know, if break even is even plausible for a prop firm challenge. I think auto break even is always good, because again, right, when you really think about it, would you rather have a loss to your drawdown or $0? But then the other thing they have to weigh as well too is if, you know, all those trades that you have set to break even, if they would have actually hit your stop loss and go to take profit, because that's extremely important too, right? If you have 10 break even trades and 5 of those trades would have 3x on the risk, then, you know, that's a problem as well too, right? So you got to really understand that, and that's why we're doing this exercise right now. So anyway, this one probably would have been break even, and that's fine. We have another opportunity right here where price breaks, but how big is a body? This body is 61 all the way to 52. Again, it's a great body to trade off of, and that's, you know, on the condition that we are in sells. Again, you lose, and that's completely fine. Now we have this setup right here, and this setup is actually crazy because of how far it goes, right? You see the little break in the structure, right? Not this per se, but over here, and price continues to push up, and you may actually lose this too, depending on how you get into the trade. So for example, this actually broke. Oh no, it's still just above stop loss, and then take profit would have been hit, or you let it run, right? Same thing over here too. Price break structure, and we see that clearly, and then again we have that great opportunity to get into the trade, and then boom, you can see that again up here. Up here is where it gets bumpy, right? And that's why I always recommend taking the first and second pullback, because it's always easier. So it's not only is it easier, but you get a better price, right? Taking the second candle here would be not a bad idea as well, but you just have to make sure that your risk is on as well. Next, we got this setup up here, and again, price just comes down, and then boom, take profit. We have another setup up here. Again, same idea, right? Pullback, and it continues, and price just keeps on doing that. It's such a strange thing, but it keeps on doing that. So that's how we really looked at this, right? This way, we're risking $8 to earn 16. Or no, I'm doing this wrong. $9 to earn $18, just to be consistent, because this is 2 to 1. So we would have won. We would win this trade here. That's 1, 2. We would have lost this one and won the second one. So we would have won. So trade 1, 2, 3, 4, 5, 6, 7. 6 trades in total, right? 1, 2, 3, 4, 5, 6 trades. 6 trades in total. Profit. So this trade would have been 18. This trade, another 18. This trade would have lost 1, so minus 9. We would have won the second, 18. And then 18 up here, and then 18 up there by 12 o'clock. So now what is our profit on that? So we would have gotten $81, which converts to 81 times 5, $405 in total. And this is on the MNQ, If this were the minis, it would have been 81 times 20, so 1600, right? Just because of how it's set up. So let's continue. We'll go until 3-4 o'clock. So again, breaking structure, and then potentially buys here, and then that would have been a loss. Breaking structure, excuse me, 602. Breaking structure again, buys, TP. Do it again, loss. Do it again, loss. And that's okay. After a certain time, things do become more difficult, or the market just, acts like the market. It's strange. But you really got to keep in mind your structure as well too, right? So let's continue. We get into 4 o'clock, and now nothing left. So now we're on August 30th. 1 a.m., 3 a.m., 4 o'clock. Okay. Boom. We made it. So 4 o'clock. Probably nothing here. Then we get to 6. I should be up by 6, but again, it really depends. So price comes up here. We clearly break structure. And then what do we get? Hold on. We bring this over here. So over here, ooh, might have been stopped out. It really, really depends on the entry of this candle, right? So price comes up, then drops back down, and then back up, drops down, and back up. Again, this would be really, really tough. But let's say you didn't take that and you took this one instead, the one that was a bit more clear. Again, you probably would have been stopped out because of this big ass candle, and then price leaves. So by 8 o'clock, we get this now. Price shoots up, and it's great. Excuse me. And then structures being formed, right? This support. You can see all these wicks here building that. This will be a tough trade to take because it's not breaking any structure per se. I wouldn't really consider this the best type of structure resistance to take anything, because it's just moving up and down. So price continues, price leaves, a ton of bull candles, and nothing happens. Again, over here, we have the pullback, and then price screws you. Same thing over here. Pullback, and then boom, profits. Pullback. Pullback, profits, profits on profits. Another pullback, and then this is probably where it would hit break even because price came so high. Then we continue, structure breaks, and now we can get into sales because we've broken that structure. So now let's flip it. I'll go to 89.75. And you'll see, price does exactly what it's supposed to do. Break structure, but then the pullback reverses this. So now we break structure again, right? Price pull goes up again, and now we're in a buy again. And then what do we do on the pullback? We make the buys. Keep it simple. Keep it simple. Eventually, what I would love to see is myself reducing the stop loss from $9 to potentially, something smaller, $5. So then that I can 3x on that risk, right? and open up a bigger size. Now, what's next? So we have, why is this showing this? This should be 87. No. Should be 86. What am I doing? 86. There, 86. I think these are still valid. I think 91 minus 82. Yeah, still none. Okay, still valid. So we're good. Okay, here's another pullback, and this one we definitely would have lost because price didn't do anything, and that's why you really need to get in on the first one because it provides the most opportunity. Again, pulls down, nothing. Price does a pullback after breaking structure, and then again, great opportunity, TP hit. So now we're into the 31st. So now for 31st, this is the last day we'll do. And what I'll do is I'll do like 3 days at a time just to really, you know, back test my stuff and get into it. I forgot to check like the size of the body. These sizes of the bodies look really good. 81, so that's a 20 body. This one right here, 78 to whoa. Let's see. 79. Oh, that's a great body. Yeah, these have been really good to take them on. Especially this one. Great. This body. Great. 13 all the way down, right? It's just making it. So that criteria is excellent. So now let's get into our last day, August 31st. August 31st, coming down. And what do we get? Breaking structure, sells here. It's 5 o'clock, so probably wouldn't even get into them. So what do we see now? 6 o'clock, breaking structure, pullback, potential buys. So let's get into our buy mode. We copy this and bring it over. Then I'll make a sell one after. Ooh, this one would be tough, depending on when you get in. Yeah, this would be a break even. But then it would still go to TP, right? And that's again where I talk about, like, you know, maybe you shouldn't set to break even because the opportunity to get to TP is just so high. So now we have a breaking structure here. Again, boom, stop loss, and that's completely fine. Let's do it again. Another pullback after breaking structure. This might actually hit TP beforehand. One thing to note is it's 8:30, so probably shouldn't trade. Price comes back down. There's no like really good pullbacks to take. Now we get to this one. This pullback is so messy, especially because number one, your stop loss is already within the candle body and also the wick of the bear candle, so it'll be a tough one to take. This one again, same deal. This is very wicky, so again it'll be really tough. But this day would be a losing day for sure, right? If you ever trade at 8, loss, and then a loss again. And this is all really dependent on when the candle actually goes up and down, right? Because the wick does go through here, but does it go through here first and then the bottom, or the bottom and the top? Because based on that, that'll really decide like what kind of trade it is, right? Again, so over here there's no decent pullbacks, and that's completely fine. Structures being formed, right? Because that's what we really need. So now we're breaking structure, boom, pullback right here. Great trade setup. So let's set up our Our $9. Boom, $9. This would be really close to stop loss, but again, take profits hit, and that's completely fine. Completely fine. Structure here breaks. That would have been a loss. Loss. Straight down. And now we have again another pullback after breaking structure. Again, the keys with this is really to just make sure structure is broken. When structure breaks, good things happen. Structure breaks, good things happen. Again, this one would be really close to stop loss, so gotta be careful. But overall, great trade. Let's continue. No more pullbacks here. Great setup right here, in my opinion, but it just didn't play out, and that's completely fine. There's going to be days where that happens, right? Where your setup comes multiple times and it doesn't play out, but that's okay, because as long as you manage risk, you are completely fine. So again, boom, boom. This is not a decent trade because again, the wicks too big, number one, body's too small, and there's no structure that breaks. Over here, structure breaks. So let's look at what a sell would look like. And this one would be completely fine. But again, you got to consider the time, right? It's 4 o'clock. Do I really want to take that? If we were to tally up all of these trades, this one would be a tough day. So I think we had about 10 trades. Bring this down. So we'll start at 8 o'clock. 8 o'clock. Ooh, minus sign. Second trade, 8:30. We're not going to be taking this. Possibly in news. That's why price went crazy. So to make this a second trade, we'll do minus sign again. Third trade, let's say it's minus 9 again for the loss. Fourth trade, W, 18. Third trade, minus 9. Fifth trade, 18, W. Sixth trade over here, minus 9. And then another trade, minus 9. So we literally lost 1, 2, 3, 4, 5. 5 trades. We lost 5 damn trades. On the micro, that would be, minus 90. But then on the mini, that'll be minus 300. So again, you really gotta pick your trades correctly and use that discretion. Anyway, I'm done for this session. It was great. I'm gonna review these and also rewatch my video tomorrow and just see, how I could actually execute these in the simulation and also the live market. But yeah, thanks for watching. Bye.